What's up, Gould Miners? In today's episode, I sit down with Tate Siemer, the founder of GreenLight Equity Group. This guy's a multifamily syndicator, has scaled his portfolio from 0 to 800 doors and counting. And in this episode, we go deep, some very actionable things that we talk about. Tate and I start by talking about his multi-decade experience in the real estate game. This guy is a true real estate entrepreneur, started by flipping houses in the early 2000s. We talk about how and why Tate went from flipping houses to syndicating large apartment complexes. And we go really deep here on some actionable things that Tate talks about, his credibility kit and how he positions himself to brokers, especially if you're brand new, how you can position yourself to brokers and create that credibility to get taken seriously and start getting access to some killer deals. And finally, Tate and I talk about how to attack the current market, given the opportunities that are in front of us and why so many people are running away and how you can leverage the opportunity in front of you to get ahead. Killer episode coming for all of you. So put those AirPods in, turn the volume up, because this one is a doozy. So without further ado, let's welcome to the show, Tate Siemer. Tate, welcome to the Gould Mine.
Dude, so good to be here, Danny. Thanks for having me.
You know, the first question that comes up to mind, because obviously, like, you had a past life before you got into real estate investing. You were a ski photographer.
Yep.
So how does that happen? Like, walk me through that.
Yeah.
Journey.
For sure. Well, to take you all the way back, I grew up in the suburbs of Cincinnati, very far away from any skiing of any note. And actually, in junior high, I started skiing. My first time ever going skiing, it was an all-night ski at this little tiny resort in Indiana. Resort's not even the word. It was a hill with a couple lifts on it with man-made snow, of course. And it was raining and I was wearing jeans and it was the middle of the night and I fell in love with the sport. Like, I literally just fell in love with, I got obsessed with skiing. I got all the ski magazines back. This was the 90s. So actually, late 80s, even mid to late 80s even. So, the only access I had to any like media or anything around skiing was basically the magazines. And just kind of always dreamed, like, I remember looking at the trail maps in the magazines and like visualizing myself in different parts of the resorts, and kind of always dreamed of going to the big resorts out west. And long story short, I graduated from college in Ohio and worked for a few years trying to kind of figure out career direction. And when I turned 26, I was like, man, I'm going to be 30 here pretty soon, which felt really old at the time. Yeah. And I was like, I got to go do something fun and cool before, life gets too far by me here. So I basically asked myself what I've always wanted to do, and it was really, really an obvious answer. And I just I didn't throw a dart at the map. I was pretty strategic about picking Salt Lake City, but I could have literally moved anywhere. I didn't have any connections. And so I moved to Salt Lake in October of 99, last century. I was 26, which dates me and makes me 50 now. I just turned 50 this year.
Nice.
Long story short, I had a background in photography at that point, not action, ski, any really sport photography. But I talked my first boss in Utah into hiring me, and he's now my business partner in real estate for the last like 13 years. So,
oh wow,
we've 24 years we've worked together and in different capacities and different businesses. So to answer your question, I started the ski photography thing in 99, 2000, got into wedding photography the next year. And within 2 years, 3 years, I started my own wedding photography business, was just hustling hard and, working really, really hard and not producing the kind of lifestyle that I wanted to produce, and kind of stumbled on real estate investing. This was 2006. And just an acquaintance, some guy I didn't really know very well. He and I were talking, and he's like, yeah, I'm in the middle of flipping a triplex right now in Sugar House. Sugar House is a nice part of Salt Lake. And I'm like, really? Like flipping? Like, what does that mean? And like, you can do that? Like, it was just so, at that point, such a unique idea to me. And he was in a course that was a live every week kind of course back before Zoom and any kind of online courses or YouTube University. And so I signed up for that and kind of got my feet wet in entry level single family investing. Actually, my first deal that I bought for myself was a duplex, like 110-year-old duplex, and remodeled half of it, kept the tenants in the other half, and then sold it and made like 10 grand on it. And I thought I was like, I thought I had just struck gold and figured it all out. So yeah, that's really how that whole chapter began. And there's been a couple pretty distinct chapters in the story since then, but that's really how things got started.
That's awesome, man. So yeah, it's funny like how life kind of takes you in like different ways, but it sounds like you could have probably taken your life in a couple of different directions. Like aside from that course, like was there that aha moment, right? I mean, obviously the duplex, right? Like that was a win for you at the time. And like, that was like a lot of ways, it's like the gateway drug, right? So like that first hit, it's like, oh wow, like this is amazing. So after that duplex, how did you stay re-enrolled? Like what were some of the things that happened after that kind of re-enrolled you?
Really good question, Danny. I can honestly say like between 06 and 08, when the crash really like basically killed the sources of funding that we were using, I did two things. I did my own deals, and then I also got my my realtor license, and I worked mainly for other investors that were doing what I needed to, or what I was trying to do or was doing in the single family flipping space. And it honestly never really hit a really good stride with any of that. Either in my own investing or as a realtor. I didn't love either path at that point. And I just wasn't super successful to the degree that would have been really compelling. So actually when the crash happened, I was actually kind of almost a little relieved and kind of glad to get out. I remember thinking I'll never do real estate again at all. And then, so the crash happened in 08, and you probably remember, and a lot of your listeners will remember, like the market stayed really flat for like 4 years. Yeah. And so about 2011, so 3 years after the crash, my current partner, who I mentioned before, his name's Carl York, he approached me and said, I was doing a different business at that point and had made a little bit of money. And he said, Tate, you've got some money. I've got some money. I've got great skills with remodels and stuff, and you can go find deals. He's like, why don't we team up and do some flips together? And so we started October of 2011, bought our first deal, and really for the next 7 years or so went just as hard as we could full time at the single family flipping game. And again, kind of if you think about 2011 through let's say 2018, obviously Facebook was a thing through that. YouTube was a thing and becoming more and more of a thing. But we didn't even, I don't know if you remember or if you have the same impression, but I had never heard of Zoom or knew of that technology before COVID even. I mean, the first multifamily mastermind I was in with Corey Peterson, we didn't have Zoom meetings. And this was like 2019, before COVID, and 2018, 2019. So long story short, I didn't connect with like any real intellectual like leadership or thought leadership in the space that we were in, and we didn't do things really as systematically or strategically as we could have in retrospect. And about 2018, I did start going to our local RIA meetings, Real Estate Investor Association meetings. We have 2 good ones here in Salt Lake City. I started going to those meetings, and kind of through those meetings, my whole world opened up, and as far as other possibilities in real estate, and which eventually led to doing what we're doing today in the multifamily space. But there was definitely a progression between single family and the multifamily space. Mainly the biggest kind of like watershed moment for us was we had a 12 unit apartment, like a value add scenario in Salt Lake City, pretty much fall in our lap. Like this wholesaler that we had done other deals with brought this deal to us, and he said, "This is a really good deal. Here's how you do it. Here's what the numbers should look like." And when we kind of sat down and underwrote that deal, and I remember looking at it and going, "Man, like this is really different. Like you've got income and you've got valuation that is determined by income, and when you've got rents coming in, it's a totally different look than when you're just calculating holding costs on flips." So it was really eye-opening to us. And pretty much from that point forward, we did a few other projects out of the multifamily space. Then we're finishing a couple projects at that point. But from that point forward, we've been really focused on apartments. We did a 20 unit after that in Utah. And then I started getting real serious about more like large scale syndication models, and connected with Corey Peterson, and joined his mastermind. I got to mention my buddy Adam Adams too, who was monumental for me in getting into multifamily. He was kind of the first guy that I ever heard say to me that I could do it and do it well and have success at it. And so he's as big a reason as I'm in this space as any. But so yeah, I mean, kind of a nutshell version of kind of how we got to where we were at least 5 years ago now, I guess. And then, the kind of since we got, I think it was end of 2000, we started really acquiring in the large scale space, and we got to 50 million in assets under management in about 18 months. I think that was 6 different communities at that point. And we're currently just right around 80 million in assets under management with 798 units between 10 different communities. Six communities are in Columbus, Ohio, in that metropolitan, that MSA, if you will. And then the other 4 are in Oklahoma. Those are our 2 markets. Yeah.
There's a lot to unpack there. There's a lot to unpack there. And what I want to start with actually is an observation, which is, and I think that this is an observation that a lot of flippers they eventually come to this realization, unless they find a way to scale the enterprise, which I know that there are some flippers who really truly create a massive organization, and it's systematic and that's awesome. But for those that
shout out to my friend Ruby Tinoco, who, she what's the name of her course? Flipping might be like flipping on autopilot or something like that. But I mean, she flips 200 plus houses a year, right? And it's just a system, man. And she's a machine, and she teaches other people how to do that. So you're right, it is possible in single family for sure.
Yeah, 100%. And for most people that flip, though, it's a great way to get rich. But what you recognize and what you've discovered, and what I think most flippers end up discovering, is that you can get rich flipping houses, but you can get wealthy, buying and holding apartments or other commercial assets, or even a lot of single family homes too. So I think
I was going to say, you can get wealthy, basically flipping single family properties to yourself and holding them, like the Burr model is a great model. And there's the nightly rental model, accelerates your income on those things. There's a midterm model that I think is really worth looking at if you're in the single family space. It's basically, 3-month type leases for traveling nurses, furnished units. So there's ways, I think, especially these days, of doing it in the single family space. That said, like, I obviously have a podcast called The Apartment Gurus. We're GreenLight Multifamily. I have a mastermind called Multifamily Octane, and I coach multifamily investors one-on-one. So I'm all in on multifamily 100%, and I won't poo-poo the single family space, other than to say that it is like you said, Danny, it's kind of an exceptional situation when somebody does manage to scale the single family space. It's more often than not, people kind of spin their wheels and aren't able to really scale up.
Well, and I'm in a market too where the average sales price here in Silicon Valley, which is where I spent the majority of my my career up until this point. Yeah, the average sales price 1.1, 1.2 million. So, a lot of these flips, they buy them, they acquire them for like, $1 million, and they end up renovating them, flipping them for like 1.5. And
right.
It's a great payday, not scalable though, because it's like really hard, there's just not enough inventory to really, to really get there. But all right. So,
well, and real quick to your point, it's a great payday, right? But that's it. That's all you got. You're not building any wealth moving forward. You're not enjoying any kind of appreciation cycle. You're not enjoying any kind of principal pay down on the loan. Cash flow, potential cash flow in the meantime. So you get paid once, that's it, over, go on to the next one, and you're starting from scratch on the next one. So yeah, good point.
I learned Burr when I was like 24. Yeah, it was like 8 years ago.
Bigger pockets.
I listened to Brandon. I'd see his
Brandon's a stud, man.
Yeah, so
he's such a stud.
Absolutely. And when and that was like back in the day, right? When it was kind of like getting off the ground, like now it's
his beard was a little shorter back then, right?
Yeah. Blown up since then. But I was taking all this in, and I'd look at the deals in my area, and I'd analyze them, and I'd be like, there's no way, like the numbers didn't make sense in my, like, you can't really burr properties in the Bay. I mean, there's exceptions to the rule, but like the few and far between. Once you refinance and everything, that the debt outpaces the income.
Your rent will never cover your debt service.
100%. And so that's really the biggest issue. So I learned it, and I got excited, and then I was like, well, I can't do it in this market, and I'm looking at the commissions that I could make. So I'm just going to prospect for listings, and that worked well for a certain amount of time, and now doing the hotel thing. So I want to touch. I had this question, and I wrote it down because you said you're like all in on multifamily. What would you say to the people? So I've actually had a few guests on the show that have said this. What would you say to the people that say multifamily is oversaturated now?
Well, I think that it's definitely got a lot of eyes on it, right? And a lot of active, buyers or wannabe buyers or potential buyers. And particularly over the last year with interest rates doing what they've done, sellers have pulled back, so there's way less listings than there were. And sellers are just kind of waiting. A lot of them are just waiting this out until they can sell at a higher level when interest rates come back down. So I don't think that, I wouldn't say it's oversaturated, because to me, there's just always opportunity. It's just kind of the way that my mind works. And I mean, could you maybe do some statistical analysis and come up with, statistically, it's oversaturated. Actually, I've never seen that. And my hunch is that if it were the case, that we'd see more of that. But even if that were the true, we're dug so far into our markets with great brokers and great broker relationships that are spinning out good deals and that are priced right. And that's kind of all I focus on. I don't worry too much about the overall national scene kind of thing. And that's what I train my coaching clients and mastermind clients to do too, is become really masters in a market, in a niche, if you will. Yep. And really know what you're going for, and then we double down on broker relations. I'll mention a quick resource. My friend Bo Beery, who it's Beau Beery, Beery, not Barry. So Beery. He's a big, high volume, high dollar amount, high purchase, high sales price guy, broker in Tampa. And he wrote a book called, see if I can, Multifamily Investors Who Dominate. I think that's something real close to that. I think it's Multifamily Investors Who Dominate. And it's basically a manual, like a how-to manual on how to be a syndicator, an acquisitions and investor that brokers like bring deals to, they just want to work with time after time, right? So this is like a how-to written from the broker's perspective, mind you, a how-to for us to become really, really good at the broker relations game. Mm-hmm. And we've put all of our eggs in that basket. We did try direct to seller marketing for about a year, mm-hmm. and it just didn't work well for us at all. And then our philosophy kind of changed when we got into better broker relationships. Like we don't want to compete with our brokers at all. Right. And so if we're going after sellers, it's technically competing with brokers. And the other thing is, when we moved up an asset class and as far as unit count, and closer to the kind of 80 to 100 minimum door count, those assets are generally like 95+% of the time are going to get sold through a broker. And that's because the owner's savvy. It's an investment for them. They know the business usually, and they know they're going to be best represented, get the best price if they sell through a broker. So we're kind of just, like I said, we're all in on brokers.
I would agree, and by the way, I come from brokerage background, and I know that there's a lot of owners out there across all the asset classes that it's kind of like one of these, like the room is split, right? Like a lot of people are like, oh yeah, brokers are awesome, like what you just said, and then some people are like, oh, brokers are the devil. So
can I comment on that?
Yeah,
real quick?
Please do.
So to me, they're what you make them. Yeah. Right. Like, and yeah, are there brokers out there that are the devil? 100%. Like there's brokers out there that you don't want to deal with, but for the most part, whether a broker is an ally of yours and kind of on your quote unquote power team, or whether they're not an asset to you and they don't produce anything for you, that's really a lot of, in the end, in my book, that's really up to you and kind of how you establish those relationships.
So let's go deep on this, because it sounds like this really has worked well for you, and I want to spend some time here.
Yeah.
Let's say someone's newer to the game, and because my guess is that if you are somewhat experienced, meaning like 5 years plus in the game, you probably have some pre-established relationships, or you've already made up your mind that you're never working with brokers. So for someone that's newer to the game, what would your advice be to start building those relationships? Like how would you start that?
Yeah, it's a great question. And it's what I take my guys from step one, determining what their vision is, what their mission is in this space, creating that, developing the mindset, getting rid of the limiting beliefs, all that stuff. We're big on mindset. And then right out of the gate, we're working on, establishing what market, or usually maybe one or two markets we're going to like kind of attack. And then we just start sourcing deal, basically getting it, all of these brokers have email lists. So we just do whatever it takes to get on their email list. So we start getting deals from them. And we start, underwriting the deals, analyzing the deals, maybe even touring physically touring the deals. That is like next level when you go to the market and walk a place with a broker. That takes your relationship to the next level for sure. So it's really, it's there's no real magic bullet to it. It's really just kind of how you present yourself from day one, and we have tools and resources and ways, strategies, if you will, of kind of how to come out of the gate with a lot of credibility and with an impressive looking credibility kit, we call it, or company profile kit, which is usually a 5-6 page PDF all about your company and your logo and your team and your strategy, and we teach you how to leverage other people's track records and portfolios in that credibility kit, so that you come to town looking like you know what you're doing as best you can. And of course, we're not trying to fool anybody. And I think transparency is always the best policy, and especially in this space. But when you do have like legit people with good track records, good portfolios, the ability to get deals closed, when you have them on your credibility kit, either as like senior advisors or advisory partners or something like that, like it, huge way of elevating your status with brokers when you introduce yourself and meet them. So, and then a lot of it's just kind of numbers, man. It's like, just at bats, getting up there and taking swings, and the more deals that you look at and underwrite and write letters of intent on, even if it's a super low ball letter of intent because you can't justify a higher price, like little things like that those aren't necessarily little things, but that's really how you get it done.
I want to highlight for the listeners right now some of the things that Tate just says, because it's like tiny hinges swing big doors. One of my coaches always said, tiny hinges. The credibility kit, it's funny, right? Because if you're brand new to the game and a broker sniffs you out that you're brand new to the game, you're probably going to get a bad taste in your mouth, because you're going to say, oh, brokers are not giving me the time of day and blah, 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 blah. And it's like, well, because you didn't put in the effort to make yourself, like you said, look credible. It's funny what a little pizzazz, just tiny little things will do to elevate your status, right? Because like ultimately when you walk into a meeting with a broker, you talk to a broker for the first time. Have you read that book, like Oren Klaff, Pitch Anything?
Yeah. I have it on audiobook. Yeah.
They talks about power frames, right? And kind of when you're going into any situation, there's a status kind of realignment. And so if you're walking in, you're brand new, but you have some of these things lined up already, and you've taken the time to basically create some credibility in the eyes of the broker, then it makes perfect sense to me. What's funny is, and I never had this issue, right? So like I never had this issue, but I do know of a lot of newer people to real estate investing who really struggle with this, which is they don't get taken seriously by the brokers, and that kind of negates a lot of access to deals that they could have otherwise had access to. So I think that's a really awesome idea. And the other thing too,
I think it's just preparation. I think it's just being prepared, and by the way, if for your listeners, if anybody wants to email me, I'll send them a copy of our credibility kit, just so you know what one looks like and what it contains. So, Tate at GLEquityGroup.com. I'm sure it's going to be in the show notes, but
it'll be in the description.
Email me up and I'll get you an example. Kind of, you can almost template it if you wanted to.
Oh, that's awesome. And thank you so much for doing that for the audience.
Yeah.
You said being prepared, and it's funny because preparation instills confidence in you. And that's really what ultimately gets the deal done. Right. And
totally, dude. That's huge. Right. That's actually something I hadn't even thought of, but that's a great point. And confidence is everything, right? Like you got to show at the very least you can be brand new in this business and if you show a level of professionalism and preparation and confidence, like you can still really make an impression on people and make people want to go to bat for you.
100%. And just to put a bow on that, obviously you have your coaching program, and we're going to put all of that information in the show notes. Tate,
cool.
When I got into hotels, I had already built a business from scratch and everything. And so I knew that it was going to be a massive hill to climb. I think people highly underestimate the value of really good coaching, really good mentorship right from the get-go. I found someone in the hotel space, Mike Ely, and really awesome guy, and was really the only person online that I could find that was openly sharing how he, invested in hotels. And so I signed up for his program, and same thing. I added him to my advisory board. They allowed me to put their logo on my letterhead when I submitted LOIs. And so little things that just exactly. And when I went in and talked to brokers, so everything that you're saying right now, I'm like, oh shit, like Tate is literally describing how I started out. So everything, I can vouch for what Tate just said, is those little things. Because when you go in and you can tell a broker, I work with an organization that has X number of, assets under management, you don't have to say that you're the CEO of it, right? But I work with an organization that has X, Y, Z, and it's super powerful. So it's fun. It's it's really interesting that you said all that, because I lived it, and it's 100% true.
Yeah. It's really good stuff. And, like you said, it's just, it's the little things are really become the biggest things. You pull out, we would get our credibility. We do get our credibility kits printed on, a high gloss, heavyweight stock, paper, and have them stapled and everything else. And it's a nice portfolio, or a nice brochure rather. And, especially when we were getting our feet on the ground with new brokers, and we were sitting down with them, coffee, lunch, whatever, or even a property tour, and we, pull one of those out and put it in their hands. It's you can see it in their eyes, man. All of a sudden, it's the conversation just entered a whole new realm, because number one, they are impressed. They respect the effort that you made. They can tell you're not just fly by night. Number two, it gives them a lot of talking points and a lot of things to ask about. So, again, the credibility kit, guys, big takeaway from this episode is if you're trying to start off, especially, as your own brand, as your own firm, as a lead sponsor, in any way, put one of these together. And Danny, I think to a larger point that you made, the value of paid mentorship, paid coaching, paid masterminds, cannot be overstated, because you are essentially buying your first network.
Yep.
And I would say that if you're joining a mastermind or a one-on-one coaching program, you want to make sure that it's with somebody that has the capacity and the willingness to actually partner with you on deals. Potentially, at the very least, they are willing and excited about being on your team as a advisory board member or whatever that ends up being, so that you can include them in your promotional materials. So make sure that's part of what you're getting when you go high level with coaching or masterminds, which to me is there's nothing that accelerates this whole thing more than doing just that.
I could not agree more. I couldn't agree more. So, one of the things, switching gears a little bit here, Tate, one of the things that stuck out to me earlier, just kind of hearing your story and what you've gone through, you are kind of in a unique position, because I don't talk to a ton of investors who have really ridden the last two cycles in full. You were in it.
That's a good point.
From the early 2000s, you saw the run up, you saw the crash in 08. And now you've seen what happened over the last 18 months. So What lessons have you learned these last two cycles? Because I think you have a unique perspective.
Yeah. Well, I can't say I rode out the '08. I did own a couple rentals, I guess, through that period. And it was tough because, rents were down and there was no such thing as rent increases through those years. And, I had a couple properties that kind of barely broke even or didn't maybe even break even, at different times. But, I got to say, this last one, man, this last 18 month it's kind of been a little bit of kind of hang on and try to get through it the best you can, because, we had basically like a quintupling of interest rates in a 10-month, 12-month period.
Yeah.
Which, on a sheer point basis is not like an historic high, but on a percentage basis is not only a historic high, but it's unprecedented. We've never seen interest rates quintuple. If you think about, had we been starting at, let's say 6%, if we had quintupled from 6%, we'd be at 30% right now, right? So that's really the degree, in some ways, the degree to which interest rates went up. And, it's shocked the market in a lot of ways. And it shocked the debt market, in terms of, lenders that have pivoted away from lending or have gone to really high LTV or really low LTVs and very high interest rates, bridge products, for instance. And it's really shocked the equity market. It's really shocked the limited partner, the LP market, and that we've noticed, in the sense that a lot of LPs right now are in deals that are not doing very well. And it's because they were purchased, at the very top of the cycle, and their interest rates are adjusting on the loans or even coming due. And there's actually unfortunately, some kind of tragic scenarios out there that are happening to really good syndicators that, by all accounts, a year and a half, 2 years ago, were doing things well and doing things quote unquote right, and so it's been nobody could have predicted this at all. It was totally unforeseeable. A lot of people saw corrections coming for sure, but to this degree, I think there were like 13 or 15 or 17 interest rate hikes in 2022, or 2023 rather. I forget what, and I guess there weren't maybe that many hikes, but because they only meet a certain amount of time, but maybe it was the last, maybe it's the last 20 meetings. The rate hikes have just been crazy. Obviously don't quote me on any of those stats I just tried to get out, but anyway, it's caused us to have to pivot, in terms of our buy box and what we require now of properties for us to move forward with them. We are in the much nicer property conversation these days as far as asset class. We're typically at least a B, maybe a B minus if we can get it to a B plus or an A minus kind of thing. We're newer on vintage than we were by a long shot. We're even underwriting some brand new product that's in lease up, those sorts of scenarios. We're looking for assumable loans with low interest rate, ideally fixed interest rate, things like tax abatements, seller financing. A deal has got to, and then the other thing we're trying to achieve in most cases is a property that will pay a preferred return from day one of ownership to our limited partners, which, put all those together, and it's a pretty tough find. But it's what we closed 3 deals in 2023. One of which is kind of our, the crown or the jewel in our crown. We love it. It's an 87 unit steel factory in downtown Columbus that was converted to luxury lofts. And we did it. That was it was our only non-syndication that we've done in years and years. It was a joint venture that we did with another group. And, but we did 2 heavy lift value adds in 2023 that were, just really, really difficult to get to the finish line.
Sure.
And it really came down to the vintage of the product. You know, they were basically 1970 and one was a little older than that. And the fact that they required a pretty significant lift to get them to the income level that we were projecting. And investors just didn't have a huge appetite for you know, a property they were gonna have to wait a little bit to start getting paid on, you know. So that's caused us to change where we are, change what we're looking for. We've actually not been under contract now on a property for about maybe 6 or 8 weeks, which is really weird for us. Like, we're kind of always under contract on something, always trying to get something to close. So it's actually kind of nice a little bit, take a little breather from raising capital and putting deals together. But, you know, we're always pounding the pavement. We're always underwriting. We're always like aggressively looking for great opportunities.
Yeah. It's interesting that you say like, hey, we're adjusting our buy box and everything. I have to wonder, right? Because obviously the rate adjustments shocked the market, but I can't help but feel like the opportunity is just staring everyone like in the face right now. Everyone is just like, hey,
oh yeah,
right. And then, but like everyone's just like so risk averse all of a sudden. It's so interesting because people always want the deal, but then when the deal comes up, the economics are so, like the economy is just so wonky that most people kind of retract. So what are you doing right now to kind of capitalize on the obvious opportunities? Because clearly they're there. You just have to know how to look for them, and then also know how to sell them to the investors so that they kind of like get on the opportunity train, so to speak.
Yeah. Great question. I mean, I think part of it is understanding the story that you just iterated, which is that really right now and probably the next like 10, 12 months, 18 months maybe are probably the best buying window that we've had in really 15 years, 12 years at least. Mm-hmm. And maybe the best buying window that we have for another long period of time.
Yeah.
Once we get into a positive economic cycle and we start appreciating again. And the reason for that is that there's a lot of distress in the market. There's a lot of properties that need to be sold for different reasons, and a lot of motivated sellers for that reason. And cap rates have decompressed significantly because of interest rates, and pro forma rents are down, projections are down because of the economy. So you got to know how to attack this market and how to buy. And that kind of goes back to broker relationships, but also really know how to underwrite, know what you're looking for. But I think this is a massive opportunity. This is the perfect example of the Warren Buffett thing about run in when everybody else is running out, kind of, go in whenever, I forget, be greedy when everybody else is panicking. Yeah. Panic when everybody else is being greedy, kind of thing. And so I think this is a perfect example of that. And those that do well and do business and do good business over the next 12, 16, 18 months are going to do real well moving forward.
Yeah, I definitely agree. And it's weird. I was just at a hotel conference, tons of ownership groups there about a week and a half ago. And there were a few people that actually everyone that I talked to was just like 4 months ago, we were at a conference, almost all of us. And we were like, hey, like 2024, like it's the year, right? So many opportunities are coming up, blood in the streets kind of thing. And then we were all kind of just like, it hasn't quite happened yet, we're like, what? So what's your theory there? Because like, yes, there's opportunity. Yes, there's blood, so to speak, in the streets, but like it's not quite where we thought we'd see it. So like, what's going on?
Right. Well, I mean, if you think about it, like we haven't seen the recession that people were predicting, right? I mean, like by all measured accounts, we're looking at a soft landing on this economic downturn thing. I mean, depending on who you believe, but like that seems to be the consensus. And so I think, I think that's maybe causing people to settle down and not panic sell as much. And it's probably I'm sure it's causing banks to be more optimistic on spreads. I mean, interest rates up until maybe 2 weeks ago, I think they were down 1.5 points at least from their highs. I think they maybe have come back up. And by the way, this is beginning of February 2024 that we're talking about all this. But so yeah, it is a good question. You're right. Like where are all the deals, right? And where are all the really motivated sellers, and where are the bargains and whatnot? And the reality is maybe we won't see that to that degree that everybody was kind of hyping up. Yeah. But again, you just got to have your finger on the pulse with, and I was talking to one of my coaching clients this morning who, is like in a great submarket himself, and one that it has a lot of national attention on it. And he's got a lot of attention from people that want to work with him, like boots on the ground. And I'm like, dude, all you need is like 1, 2, like ideally maybe 2 or 3, but even just 2, just killer broker connections that you're getting great opportunities from. Yeah. And you get 2, 3 of those a year from those guys, and you get 2 of those, like, doing a deal a quarter in commercial multifamily as a pretty new firm and a new investor, a new lead sponsor, like that's very respectable. And it's I think it's a good pace to shoot for in your first maybe 2 years of doing business. If you can turn things up to that degree and you're able to put, the equity together and everything else, your teams and sponsors, everything you need to get those deals done, that's, you're doing really, really well. So, so I guess I'm just going back to like ultimately taking maximum advantage of any market, in my opinion, is just that kind of back to that, the whole ethic around broker relations. And again, if you want to make it easy for yourself, go get Bo Beery's book. I have no reason to push it. I bought like 30 copies of it for my coaching clients and nice. And give it to each one of them. Cause to me, it's just a masterful, efficient guide to doing this game at a really, really high level. And the specific part of the game, which is sourcing great opportunities.
Yeah, we'll go ahead and put the name of and link it up in the description as well. Tate, we're actually coming up on time, man. I want to be respectful and whatnot. So in traditional Gould Mine fashion, why don't you leave the audience with one final Gould nugget?
Gould nugget, yeah. I'll just go back to this and take it for what take it for what it's worth. I am a coach. I coach what I consider to be really elite entrepreneurs in this space. And we have a small mastermind group that's super tight. We know each other really well. We help each other. We partner with each other. So I am biased. I'll admit that. That said, if I hadn't joined Corey Peterson's mastermind in 2018, 2019, had him at that point, he actually produced my credibility kit. He had a employee working for him that designed it, put it all together. Nice. We came up with some copy, but he and his wife Shelly were on it as partners with us. And not only that, but Corey gave us the just the confidence to start talking to, having conversations with brokers that are marketing 140 unit, 160 unit type properties. And it was because he was on our credibility kit. He was willing to partner with us on good deals. And he was at that point a stud in the space. He still is, but he had and he's just a confident guy anyway. So he gave us, like, he just put us light years ahead of where we otherwise would have been. So that said, nothing beats a paid coach, mastermind leader, or mentor. And there's nothing you can do to accelerate things, in my opinion, more than that, not to mention the network that you'll get to be a part of, with the right group. So I'll leave it at that, Danny.
I couldn't agree more, Tate. Thank you so much for your time, man. This was awesome, and hoping that we could do a part 2 sometime, because I can tell there's we only scratched the surface there, buddy.
I love that, man.
We could keep talking for hours. So
yeah, I feel that too, dude. I feel that too. Let's do it sometime. I love it.
Sounds like a plan, brother.